Good afternoon, everybody. Welcome to our webinar, Off-Payroll Working Rules for the Private Sector. Are you ready? Or what you need to know about IR35. We'll give it a minute just to allow everyone to connect. And in the meantime, you'll see on your screen coming up in a second, a poll question, which we'd like you to answer, please. This will give us an opportunity to gauge the level of understanding, and we'll check at the end to ensure that the session's been effective. If you've got any questions as we go through the session, then please send them via the Q&A button, which you'll see at the bottom, and we'll answer as many as possible at the end. So I can see that, yeah, the majority of you have answered that, and we're ready to go. So, welcome to today's webinar, brought to you by Hillier McKeown, a top law firm in the North West and North Wales since 1958, and the Giant Group, a leading workforce management company for the last 30 years. Our subject is off-payroll working rules for the private sector. Are you ready? And again, all about IR35. The purpose of the event is to, firstly, make you aware of the changed responsibilities for all parties under the revised rules, then to describe the potential implications in terms of risks and costs, and then to outline the options to address the requirements. We will try to cheer you up with this really exciting subject and take your minds off you're now being in lockdown tomorrow, Trump and Biden, American elections, and Brexit's coming. So let's, without further ado, our keynote speakers today are from Hillier McKeown, Justine Watkinson, who is a partner and head of employment law. Justine works with SME clients across many sectors and is their go-to expert on the full range of employment law matters. She deals frequently with the technicalities surrounding employment law status, workers' entitlement, and self-employment. And from Giant, we have Dan Haslam, who is Group Sales Director, and his role includes helping clients to manage their contingent workforce compliantly and cost-effectively, using the whole range of Giant's products and services. I'm David Hopkins, a workforce management consultant with Giant, and I'll be the chairperson for this session. The format today will be based on a number of questions which Justine and Dan will address to give us a full view from a legal and a practical perspective. There'll be an opportunity to ask questions at the end, so please submit them as we go through the formal session. And just a couple of points to note before we start. Firstly, please complete the poll question if you haven't yet, and I can see that most of you now have. Thank you for that. We are broadcasting remotely today, so apologise in advance for any sound or technical issues. I think we're okay at the moment, and therefore let us begin. First question then, Justine, would you please remind us what is IR35 and why is it so called?
Okay, good morning or just nearly good afternoon, everybody. So IR35 is a set of tax laws which form part of the Finance Act, and they deal with off-payroll working. And the first legislation in relation to IR35 was introduced in April 2000, and it was called the Intermediaries Legislation. And the actual name for IR35 comes from the original press release, the Inland Revenue Press Release 35. That's kind of how exciting tax people are. So by way of background, of brief background, the legislation was introduced to try to stem what HMRC felt was a tax avoidance in the system, where contractors providing their services through a PSC were not paying the right amount of tax by working as disguised employees. So the press release in 2000 said it's possible for someone to leave work as an employee on a Friday, only to return the following Monday to do exactly the same job as an indirectly engaged as consultant, paying substantially reduced income tax and national insurance. So the government promised legislation to tackle this, and that's what IR35 is.
Okay, thank you. So if that's its origins, then what are the current arrangements, and what significant changes are being made that affect the respective parties?
Okay. So when the IR35 rules were introduced in 2000, and as they are at the moment, the onus is on the contractor to assess their status for tax purposes. And the contractor would account or accounts to HMRC for any tax. And the end user or the client was not expected to apply their minds to the tax status or liability. Well, the problem with that is that HMRC had recognised that these assessment arrangements meant that lots of the contractors were assessing their status incorrectly. In fact, up to 90% of them who have been assessed by HMRC were wrong. And the Treasury estimated that they were losing £1.3 billion per year by 2023 if the law wasn't changed, in the absence of any changes. So in April 2017, new legislation was introduced, but specifically into the public sector. And here the responsibility for assessing the status of the contractors working for public sector clients and providing their services via a PSC or through an agency to a public sector body shifted to the end user, or the clients are shifted to the public sector client. So where the relationships had the features of employment, then the fee payer or the end user client had to account to HMRC, or has to account to HMRC at source for the individual's income tax and national insurance contributions. And they also have to pay employers' national insurance contributions, which I think currently stand at 13.8%. So this led to an increase in cost for the end user client and a loss of income potentially to the contractor. But it led to an increase in revenue for the Treasury.
Okay, so perhaps you just sum up, and I think it's fairly obvious, but just sum up for us, why are these changes being made?
Okay, so just a consultation arrangement was issued in May 2018, and it was announced in the 2018 budget that changes would be extended to the private sector from April 2020 to affect medium and large businesses, with an exception for small businesses. But COVID delayed the plans. And in principle, the reason why is because HMRC believe there is a significant tax avoidance in the current system. The public sector changes saw a huge increase in revenue from contracting arrangements, and the Treasury is under immense pressure to fill its coffers after COVID and Brexit pressures. It estimates that with the change in the law, there'll be an increase in revenues of £3.1 billion between 2021 and 2024 with these new changes. So what's not to like?
Yeah, I think I was going to add into that, Justin. I think this has been a long saga of a bit of a marketing battle, shall we say, certainly between contractors, pro-contractor bodies, and then HMRC as to what is the potential tax take that HMRC may pick up from the changes versus reality. I think we're looking back to the sort of stats that you were showing then earlier, from HMRC's perspective, they absolutely believe that 90% of the market is non-compliant, and there's a huge tax take there for them. Some suggestions actually that when the changes went through in the public sector, they perhaps actually received more income than they thought they were going to get from the changes. In fact, their expectation was that there might be still 30% excuse me, of some workers in those public sector bodies that may still operate outside, but actually it was much more than that they started to see picking up. Now we're moving, the sort of battleground moves towards private sector. Obviously, that's a bigger proportion of the economy, so there's even more money up for grabs, so to speak, as far as HMRC are concerned. But HMRC are keen, I think, to make sure that the market regulates itself as much as possible. So they've also, it's interesting, sort of post-public sector, that we have seen activity from HMRC on specific clients. I won't name them, but if you don't have to do much of a Google to find out who those public sector hirers are, where even where they've gone through the process under the new legislation of doing the assessments and taking that responsibility, where they've deemed some workers to be outside of IR35, HMRC have looked to challenge some of that. So not only looking at the initial uptick from the market sort of righting itself, but also they've done some retrospective work on looking at large hirers that have gone through the process and actually really checking that they've taken reasonable care in making those determinations, which is a key point. So yeah, it's quite interesting how, you know, with the sort of speculation goes on today, the most frequent question I still get asked is this actually going to happen? So I'm sure you've had the same question. And I'd say the same as I was saying right up into the middle of March this year, which is, yeah, absolutely, it's looking like it'll happen. It's now gone through royal assent. But as we know from COVID, with COVID hitting the market, anything could happen at the last hour, but all businesses can do is prepare and be aware that there are some changes, there are some additional risks, and soon you start sort of addressing your plan and looking at moving things forward, the better.
And in terms of preparation, Justin, you mentioned there small businesses as opposed to medium and large businesses. So Dan, if I can turn to you, what is a small business? How is that defined exactly? And how does this new legislation affect them?
Yes, I think just to be sort of right from the start, IR35 affects everybody. So there's no exemption to IR35 at all. But what we're talking about here is in the new proposed rule changes is what the government is saying is where a business is classified as small, so that's standard accountancy classification, which is a business has to tick 3 tests. So the first one is if your turnover is less than 10.2 million, your balance sheet is less than 5.1, and you've got less than 50 employees. If you can tick 2 of those 3 tests, then you'd be viewed as a small company. And therefore, what that means is that the new risk profile that Justin went through doesn't apply. It's the old regime, or the current regime, so to speak, i.e. it's the worker's responsibility to determine whether they feel they're operating inside or outside, and it's the worker's risk. Okay, for a medium-sized business and a large business, that's different. From April of next year, it's the hirer's responsibility to make that determination of status, and it's the fee payer's risk. So just to clarify, the fee payer, because you can have some pretty complex supply chains, the fee payer is the contracting body that's paying the PSC. So it's usually the body that's above that limited company. So typically you'd see, you know, usually you'd have a hirer and a recruitment business and then a PSC. In that supply chain, it'd be the recruitment business that would be the fee payer, and they're the ones that would effectively carry the risk. So it's interesting, even, you know, you'd think that would be quite simple as a definition, right? Small company, easy, check balance sheet, turnover, number of employees. But clearly that's a moving feast, isn't it? Everyone's metrics there are moving. So HMRC also came out to say, when you're considering your status as a small company, you should be looking at 2 consecutive accountancy periods. So businesses shouldn't be worrying about checking how many employees you've got every 2 minutes. This is them taking a bit of a broader view, looking at 2 concurrent accountancy periods. If you're ticking the box as a small company, or you're expecting to tick that box in as a small company next year, then the rules will apply from next year. So there's been a little bit more guidance that came out from HMRC in the last couple of months, just to give some clarity on that. Another question that I get asked quite a bit as well is, are they looking at group or are they looking at small companies? Because I think back in when we first saw the legislation proposed, a lot of people were thinking that's fine, we'll set up a new co within our group, route all the contractors into new co, and new co will be a small company and that'll be fine. But HMRC moved quite quickly to say, no, it's not that easy, guys. We're going to be looking at the overall group structure here and taking the view there. So you can't just simply start moving contractors around within the group.
Okay, so if we know who it affects, then let's look at the key risks and the behaviours that you've seen, Dan, in the supply chain, so the off-payroll workers, the agencies, and the end users? What have you seen that that affects them?
Yes, I think obviously my comments would be quite high level, looking at, there's always pockets and exceptions and quirks, but sort of talking just generally, I think we've got sort of two periods in time to look at here. We've got the reaction that the market made to the public sector changes, and I think we've also got a pretty good insight as to how the market was reacting earlier on this year before the postponement. So I think just generally speaking, from a contractor perspective, I'd say that the vast majority of workers that were deemed inside IR35 looked to move to different payroll methods, and I think the umbrella model was a pretty popular option in the market. When people operate through an umbrella company, then the tax is deducted at source by the umbrella company. So that was an easy sort of lift and shift. I would roughly estimate, we probably saw about 70% of contractors that were then deemed inside that went and worked through umbrella companies. Some contractors also actually interestingly wanted to retain their limited company. So not all. So when you're looking at IR35, it's an assignment by assignment basis. So it's not beyond the realms of possibility that a worker might have one assignment deemed inside through one hirer, but there could be other work coming through. So we actually found quite a few contractors want to retain the use of that limited company, which then presents an operational challenge to the fee payer, because they're then having to do tax deductions but still pay off to a limited company business, the PSC, making all the necessary deductions for tax, paying over to HMRC, and then paying the net that's left over to the person's business bank account. So we did see a bit of that. I would probably say, probably 10-15% of the workers that were affected, so certainly not as popular as the umbrella. But it's interesting, if people are thinking about future payroll options, to consider. You'll have some contractors that might look at that. And the other thing from a contractor's perspective is they like to shop around. So they want to explore the payroll options, explore this weird and wonderful world of payroll companies or umbrella companies. I hesitate to use umbrella because umbrella should be a very straightforward model that's operated compliantly, although I might touch on it later. There can be some bad payroll practice that comes in there that gets sort of tarred with this umbrella company label. But contractors can be tempted by some of that non-compliant payroll activity because they're advertising high take-home pays. But contractors getting paid through an umbrella company, the take-home pay is going to be something like 55 to 65% take-home. Some of these non-compliant providers will advertise take-home pays of 85, 90%, and they're really good on the marketing front in terms of saying that the HMRC compliant or HMRC approved. That should be a red flag. HMRC never approve anything, or they've got QC opinion. And if things are too good to be true, then they often are. And there's plenty of scare stories in the market around contractors now getting caught up in very long, high, backdated tax issues because they've been working through non-compliant providers. So you need to make sure that from your perspective as a hirer or a recruiter, you're trying to direct them to a compliant offering, but don't be surprised if contractors are going to push to try and get paid through a variety of different schemes that might potentially pose some risk for you. I think the other thing to observe from the contractors as well is that, I don't know if it's surprising or not, but many of them were quite oblivious to the sort of risks of operating, the tax risks of operating these limited companies in the first place. Often their accountant had not really done a good job in explaining the potential risks there and this key decision that they have to make around IR35. So there's a big education piece that has had to take place. I think the dry run of this year has helped get the market a little bit more up to speed, but I'm sure there's still many people operating in the limited companies that aren't fully understanding the sort of implications around that. I think from a recruitment business perspective, I think their main focus is ensuring that they're offering the contractors those payroll options, as opposed to just one umbrella. Have a PSL of umbrellas. Consider if you can facilitate payments into limited companies. Some might even consider their own payroll to take the contractors on. But I think the key thing for the recruiter is wanting to work with the hirer to understand what the determination process will be and ultimately what those decisions will be, because quite quickly that's going to move into a conversation around rates, which has contractual implications to it, and there's a lot of admin and a lot of work there to be done to get everyone ready to go for April the 6th of next year. And I think lastly, from a hirer perspective, you know, it's not the hirer's day job, right? So IR35, it is technical, it is detailed. You know, a lot of businesses have got a whole host of other things on their agenda at the moment with lockdown, the economic impacts of COVID. So, you know, IR35 it will get up onto people's radar, but realistically, a lot of clients tend not to react until the sort of first quarter of the new year. So, you know, I would recommend to anybody that they try and get their action plan in place as quickly as possible, and not to delay if you can, because the time does run out quickly. We're already into November, and you know we'll be into the thick of it for the early part of next year. So the sooner you can take advantage of the time that we've got, the better. But I think but again, from the hirer's perspective, I think risk is probably the biggest driver for them. There's clearly a lot of risk to them now under the proposal, under this legislation, and that risk often sort of drives and dictates people's decisions on how they're going to look at handling this. We saw a lot of the large banks do something quite interesting, which is rather than actually go through the whole determination process, they actually made a business decision not to engage contractors via limited companies moving forward. And what that does as a decision is it means you don't have to do the assessments, you don't have to worry about that whole operational process. You don't have to worry about reasonable care either, because you've not made an assessment. You're just basically saying if you're a contractor and you want to engage with us, then you have to either engage directly, you know, via an umbrella company, or you have to go onto our payroll. And that sort of took them out of this whole operational process. There are some very clear implications of taking that decision, which are around potential rate increases that you might have to discuss with the workers, and there's some cost associated with it. But it's probably like the least risky way of sort of tackling this population. Justin, you got any further comment to add with regards to the hirers and the risks involved?
Oh yeah, well, I was going to comment on the worker, the off payroll worker first, because I was going to say, really reiterating what you'd said, Dan, was that it's potentially going to mean that the contractor is going to take home less money. And so they need to probably think about whether or not they want to start negotiating kind of new financial terms with the end user, and having those conversations now, or starting those conversations. Like you say, it's ticking down very quickly till April. If they're in lockdown in November and have got a bit of time, maybe that's the time to start looking at it. Being proactive as well, and looking at the way that you work as a worker and how you contract your services to the end user is also important. Because there's been quite a lot of lethargy, I think, in the marketplace since 2000, because, you know, things haven't been chased down. The onus was on the contractor, and they got into a comfort zone of working in this particular way, going into the same business every day, doing the same kind of things. And, you know, that won't wash now. If you look and feel like an employee, you are almost certainly going to be found to be an employee from IR35 perspective. There's a phrase that says, if you look like a duck and you quack like a duck, then you probably are a duck from a IR35 and HMRC's point of view. So it is really important to be very proactive as the contractor, to say, look, how am I contracting with these people, and can it be changed, or do I need to kind of fess up and accept that I am actually an employee or a disguised employee?
Yeah, no, totally agree. I think there's probably, the hirer has got to make a decision probably quite early on as to what their appetite for risk is versus their appetite for increased costs, because that then starts to drive, well, are we going to take a decision not to engage, or are we going to engage, and then who are we going to look at assessing? Are we going to assess the entire workforce? For some businesses it can be quite large, so you kind of first start for 10 as a hirer is thinking where you appear on that sort of line, if you will, sort of highest risk means potential least cost, highest cost means potential least risk, and it's just trying to make that view. And then from there, that should start to inform what sort of strategy you're going to put together, how you're going to assess, how prepared you are to work on working practices changes that you reference, for example.
Yep.
Good, thank you both. So there's a lot of threads in there and a lot of different things to think about. Perhaps I can start with you on this, Dan. What are the best sources of information if I need to know more offline and just sort of look a bit more into this? Where should I look?
I think you should certainly start with the gov.uk website. There's an awful lot now of material and collateral on there that explains, you know, direct from government, the implications of the legislation. They've also got a lot of comments on some of the stats that Justine was using around behaviours. You've got the government's own, or HMRC's own, check employment status for tax tool, or CEST for short. I absolutely would recommend everyone have a look at that. It's heavily criticised in the market, to be fair. It does try and address and cover a lot of questions that would form the basis of an IR35 decision, but there are some key areas, namely mutuality of obligation. I don't want to get too technical on today's call, but that's an area that it doesn't address, so that's where the criticism comes through. But HMRC have come out and said, if you are using, you know, if you use the tool and you answer the questions directly, and it gives an outside decision, then, you know, we'd stand by that decision. So I think that's a good starter for 10. I think, you know, as I was saying before, for hirers, this is absolutely not the day job. It's quite a specific area. It's technical, so you should be seeking some professional advice, clearly from legal experts that you engage with the business, but also people that specialise in dealing with contingent workers, and just helping them form the strategy and advise you on what might be best suited for your particular circumstances. There's a whole raft. I mean, you don't have to type in IR35 into Google and there's a whole raft of information that's out there. But as with any research that you do, always think about the source and, you know, what the angle will be. So I would always suggest people start with the gov.uk website first. Justine, any other areas that you think people might want to have a look at from a sort of information perspective?
Yeah, well, if you Google IR35, there's millions of really, I spent the weekend looking at some great podcasts from, you know, people around IR35. There's loads of information out there. So that's always a good place. As you say, the HMRC guidance of off-payroll working, if you Google that, and a really good, quite heavy going, but really interesting is the House of Commons library note on PSCs and IR35. If you pop that into Google, it comes up, but it gives the full history, you know, all of the information that you need behind the reasons why, but also how they're going to apply. Yeah, there's some ideas. Just going back to some comments you made about, you know, the risks for end users. And assessing status, the kind of employment lawyer in me, putting that to one side, status is a really difficult, you know, it is a really difficult and technical area to consider, you know, in respect to employment law and in respect to tax. I just to kind of demonstrate how difficult it can be. I looked at just two recent cases, well, with ITV, you know, Eamon Holmes and Lorraine Kelly, and it's interesting there because ITV contracted with both of those two individuals through their own PSC companies, and in the cases there, Lorraine Kelly was found to be outside IR35, whereas Eamon Holmes was considered to be inside IR35. Now, to the kind of not necessarily even untrained eye, they look like they deliver the same kind of services. You know, they both work for ITV. They both present on the morning breakfast show. They both, you know, interview people. They do the same or similar job. But actually, when they drill down into the kind of various step tests for status, under the IR35 legislation, they came to a completely different version outcomes on both of those cases. And there were some really kind of interesting little kind of quirks in relation to Eamon's contract that weren't applied with Lorraine's, which helped HMRC kind of close him down. So it is technical, and it is sometimes quite difficult to know whether you're inside or outside. So I think getting some kind of professional advice, and obviously using the CESS tool, is really, really important, because I think HMRC have said that if you use the CESS tool, that they will take the lead from that if you've answered the questions fairly and honestly, as being a kind of principal driver for you properly using reasonable care.
Yeah, no, agreed.
Okay. Right, well, thank you both for your responses so far. We have received a number of great questions from the audience, which we'll start to address now. As we start to do that, perhaps I could just ask you to redo the poll. Here's the acid test of Justine and Daniel. Just see if we manage to shift you at all from where you were before, and I will we'll make a comment on that when everybody's had the chance to vote.
Hopefully the vote won't be as close as the Biden Trump one.
Yeah. We'll have to go into extra time then, which nobody would want to do. Okay, right, so whilst that's happening then, our first question from the floor is one I'd like to start with Dan on, and to say, you mentioned assessments there, Justine, so this one will help to cover it. What options are available for carrying out assessments and arriving at the right status determination?
Well, I think we've mentioned the first one, haven't we, which is the HMRC tool, check employment status for tax, or assessed tool. So I think, when I'm advising clients, if they're looking at making assessments, then it's a good place to start. You need to look at it and think it possibly a little bit more conservative than some of the other assessment tools that are out there. But if HMRC are going to say they'll stand by the result if it's been answered accurately, then it should surely be a starter for 10. There are also, though, a number of other providers out in the market that provide IR35 assessment services, and we partner with a few of them. I think the key when you're thinking about your assessment approach, probably thinking about your business around how many workers you have. So how many contractors have you currently got that are engaged? If you've only got a handful, then CESS might be appropriate. If you've got a bigger population, if you're running hundreds or thousands of contractors, then one of the online tools might be much better to facilitate that, because you can use the technology. They usually have algorithms based on the nest of questions that can be asked, and then they give you quite nice reports on whether someone's inside or outside, and you can get through a larger population using those sorts of tools. Some of those tools and some of those providers then also go on to offer insurance-backed services as well. So they'll say, we'll give you an assessment. If we give you an outside assessment, you can also potentially provide some insurance to back that decision up. Those insurances haven't really been tested as such, but would give a level of comfort to a hirer or a contractor potentially, if they wanted to sort of consider that. Or you may just speak to an employment lawyer or an accountancy firm, a professional advisor, who will take that piece of work on as a project and go through that process themselves. So a lot of the law firms and a lot of the sort of top four have got their own tools for doing these assessment services. So quite a broad range. There's obviously a range of cost and a range of tech around it. And really, you just need to be thinking about your own circumstances to decide what process is most suitable for you.
Anything to add there, Justine, in terms of those insurance-backed assessment services and other things you might have seen?
Yeah, I mean, a lot of my clients have used the CESS tool, as have we at Hillier McEwen, and we found it very user-friendly. It did, like I say, come in for a lot of, like Dan says, come in for a lot of criticism, but they have massively improved it. And the document that it kind of produces at the end is a sufficient kind of status determination document that you can keep on file to show that you've applied what's, you know, the reasonable care element that is required really by HMRC for you to demonstrate. So that would be that's been my main go-to tool really. But yeah, if you have other providers that can do mass assessments and support, then, you know, get in touch with Dan, because they can direct you to the right place to help you do that as the hirer.
Okay, yeah, good. Okay. Our second question then relates to those off payroll workers who are deemed to be inside, and raises an interesting question, and I think one for you, Justine, around the difference between tax law and employment law. So if off payroll workers are deemed inside, do I have to employ them, and does this bring into a play the effects of tax law and employment law?
That's a really good question, and as I've explained, it is a complicated area of law, because, you know, the status tests aren't enshrined in any legislation anywhere, and each case kind of turns on its own particular facts. But from an IR35 perspective, if you're deemed to be inside IR35, that's only a determination for tax purposes. So it's a determination under the tax legislation. So it doesn't automatically follow that you would necessarily then be an employee or deemed to be an employee under the employment legislation. However, the tests are very similar. In fact, I think the tax tests were were principally taken from the employment law tests. So they're very similar and they're very persuasive. So if you're going to get an IR35 determination that you're inside for tax, then there's a very strong case, and the employment lawyer in me sees red flags going up all over the place, that the individual is probably going to be able to say, or you as the worker are going to be able to say, I am more than likely an employee for employment law purposes. And that then brings in a whole host of other complications, because, you know, if you go and fire somebody who's an employee and they have 2 years service, you can get an unfair dismissal claim, and also they're entitled to all kinds of benefits such as holiday, sick pay, other kinds of statutory holidays that you're entitled to. So I think if you just be careful, if you do get a determination, or you know the CESS tool does come out with you being inside, you really need to be having quite a grown-up conversation between the parties about how you're going to deal with employment status moving forward, so that you don't fall foul, certainly from the hirer's point of view, of the employment law legislation.
Yeah, I think it's very interesting. It's quite, and there's a lot of talk going on around this sort of disconnect between tax and employment law and how it needs to be sort of more aligned. But the government's been wrestling with that for quite some time. But there's lots of interesting cases that, you know, like Uber and these sorts of situations that have come about. So I think just reinforcing what Justine said, if someone's been deemed inside for IR35, that is just around the tax take being taken out of that pay. And as long as HMRC are receiving that tax, then that's that sort of box ticked. It doesn't follow that the contractor would then get employment rights. So, for example, if we were payrolling them to their limited company on behalf of a client still and making those deductions for tax, it would still be a contract for services with the PSC, and there'd be no additional employment rights there whatsoever. It's just that effectively the net pay's dropped. That's why I think we saw the umbrella model becoming popular in 2017, and we saw it again earlier on this year, because when you move into an umbrella arrangement, again speaking on behalf of the compliant, straightforward providers that are out there, that means that the contractors then entering into an employed relationship with the umbrella. So that does give them the statutory rights that Justine was going through. The tax position is the same as what it would have been getting paid through the limited company, but now they do have those rights. So that's why it's important to consider the payroll options. I suppose in addition to those payroll options, there's also the contractual obligations of whether or not they're being paid as a worker or if they're getting paid as an actual employee. And I think over time, we'll probably see a lot more work from government trying to bring that closer together. was the Good Work plan that came out last year, which is really talking about those areas and trying to make it a lot clearer to people. But it'll take time for that to work its way through.
I think it's sorry, David, I think, you know, this area of law, employment status and the tax is a very dynamic area because of the way that the market, not just contractors and self-employed people, but are working, but, you know, the whole gig economy is driven by the relationships there have been very complicated as well. So it is something that is under constant review, and there's a lot of shifting sands. It's interesting times and dynamic, but the law is struggling to keep up with the pace of change for how people are working and how the economy is moving.
Yeah, totally agree. Totally agree with that. And actually, I think Dave and I have done a couple of areas where we've commented that actually COVID's probably accelerated that. So obviously, we've seen a lot of businesses that have been looking at the models and their, you know, how they operate and actually trying to make the workforce as agile as possible. So potentially moving away from the traditional totally employed model and actually looking at how they might be able to use different sort of worker types within that, obviously contractors as well. So I think one thing I would be keen to sort of point out is that, you know, regularly IR35 has been sort of treated as the death knell of contracting. I absolutely don't see that to be the case at all.
No.
I think if you look over at the US and you look over in Europe, it's very much contractors tend to pay quite similar sort of tax pays levels that employees do. It's only in the UK that we've had this sort of IR35 quirk, and now the market's sort of righting itself. But if you look at the bigger picture in terms of the use of contingent workers, over in the US, I think 50% of the population's contingent. We'll tend to follow their lead, and then Europe after that. And whilst we've got COVID's just reinforcing that move for businesses to want to have flexible workers, and we foresee that, you know, it's just going to be more and more contractors being engaged by businesses. So that's going to force the government to sort of catch up on the legislation and streamline it. And you can see clearly the direction of travel on the tax side. You know, all roads sort of lead towards PAYE and everyone paying those sorts of levels of tax. We just need the employment law to catch up as well, which is a bit trickier.
Yeah, and I think as we've gone through this, I think you both said that there is obviously a move to a change of status. HMRC expecting 70 to 80% to fall within IR35, and we got a good question related to that. Then when we've done the assessments and we found all of these people to be inside IR35, what are the payroll options, and how are we going to manage that?
I'll go first on that. And I think we've already covered a couple of them. So clearly they could continue to be paid into their limited companies. And you might want to engage a business like Giant, who can act as the fee payer there and do those deductions, deal with HMRC and RTI, all that money away, and pay the net into the person's business bank account. The umbrella model, as I've mentioned, will be popular. So that's where the hirer or the recruitment business would pay to the umbrella company the rates for the worker, and then that company is responsible for deducting the employer's taxes, the 13.88% employers and I that Justine mentioned, apprenticeship levies, another part. That gets paid off to HMRC. What's left over then is the gross taxable pay of the worker, and it's that the umbrella should then calculate PAYE and employees and I on. They pay that off again to HMRC, and the net's paid to the person's personal bank account, and they're an employee of that umbrella company, so you've not got that disconnect on employment rights. I think there's another interesting model that's now sort of really getting ahead of steam out there, which is something called Professional Employment Organisation, or PEO for short. So at Giant, we've run that model now for many, many years for a few of our large corporate clients. You don't hear about umbrella companies in the US. Over in the US, you have professional employment organizations, and they're huge over there. They have like hundreds of thousands of contractors in them. And the angle over in the US is around allowing those contractors to benefit from discounted medical insurances, because they can purchase it for a lot lower price and pass that benefit on to the worker. Over in the UK, that's now starting to be quite a popular model, because one of the downsides with the umbrella engagement is the contractor gets full visibility to all the deductions that are taking place, like things like employers' national insurance coming out, things like the umbrella's margin coming out, and they're not always clear on what the real rate of pay is that they're on. So if I give you an example, let's say we have a contractor who's outside of IR35 being paid £500 a day and is now deemed inside. What would happen in that example if an umbrella was involved is the £500 is sent to the umbrella company. The umbrella makes all the deductions for employers' costs and margin, and then the gross taxable pay that's left over is legally actually what the worker's money is. So that's not going to be £500, let's say, I don't know, it's £400 for argument's sake. So the problem there is the contractor thinks they're on £500 still, and legally they're not. And that causes a lot of confusion. It's one of the key things that the Good Work Plan last year was trying to address. And that's why recruitment businesses now have to produce like a key facts document when they engage contractors to make it very clear to them what the real rate of pay is that they're on. So what the PEO model does is actually does away with that confusion, because under that arrangement, the hirer or the recruiter would tell the worker that they're on £400 a day. So they tell them the real rate of pay that they're on. And that's very transparent. The contractor is engaging on the basis of a PAYE rate. The payslip is exactly the same as a PAYE payslip that anyone would get as an employee. And it's a lot more transparent and it's a lot clearer. So our view at Giant is that we think over the next couple of years that actually that PEO model will start to outstrip umbrella because of that transparency point and because of the basis that people just want clarity. And things never move super quick in our market, but we can see, you can already see the sort of the popularity of it rising. So I think that's another thing for people to consider. It works just like PAYE, except you're not having to consider taking workers onto your own payroll. You know, the other option could obviously be the hirer or the agency could take those workers and put them on their own PAYE internally and manage them. But it's very rare that I see businesses wanting to mix contractors up with their own sort of permanent staff, so to speak, because there's a lot of onboarding and offboarding that takes place with those contractors. So you can start getting messy. They generally like to keep it separated out. Don't know if you've got any other comments to add, Justine, in terms of the payroll options or what you've seen your clients looking at?
No, Daniel, I think that's a very thorough response. Thank you.
Okay, and a question then on risk, and really this again is an end user question. It's around the risk throughout the supply chain, and it's simply what are the key checks that I need to carry out on that supply chain to make sure that I'm covered and compliant.
Do you want me to go
over to you on that one, Dan? Yeah.
Okay, so I think, well, first of all, what you need to be very clear on is the financial standing of that business. So one of the ways that the risk under IR35 can now start transferring back up the supply chain is if the fee payer fails to deduct the right levels of tax. So that could be because they got the calculations wrong, or it could be because there's actual, business failure. They've gone bankrupt. They've not been able to seek, not be able to deduct that tax, or maybe more realistically, HMRC have come along and done an investigation for someone who's not been deducting the right levels of tax. They've folded and not been able to pay it, and then the risk, HMRC can move up the supply chain, ultimately up to the hirer. So where you're looking at your supply chain, you should want to make sure you've got businesses in there that are robust, financially secure. I mean, clearly that's basics of procurement anyway, but under this piece, under IR35, which does be clear that the liability can move back up the supply chain. HMRC can go all the way up to the hirer to get that money. So you want to make sure that whoever's in there is solid, and they're going to do what they need to do. You're obviously looking for people that have got a strong financial and as well as a compliant reputation in the market. If I'm advising someone to look, when they're looking at those businesses, they need to start getting to having a look at how they transact, how they explain how the taxes are deducted, confirmation that taxes are actually being paid over to HMRC. Often we see businesses asking to see our RTI statements, and you can go really quite detailed into checking that whatever the provider's saying they are doing, they are actually doing, and the reality is that money is getting across to HMRC. I would say it's very complex, So a quick and easy way to sort of have a look at whether you think a company is compliant or not. My starter for 10 would be to look at the Freelance Contractor Services Association website, or FCSA for short. So that's a trade association of providers, Giant are a founder member of it. And as to be part of that body, you have to have you have to pass some financial tests, and you also have to be audited every year by the likes of EY. So EY will come in and do an audit, looking at our onboarding practices, looking at our systems, checking our calculations, and ultimately the payaways off to HMRC, and that's done every 12 months. So that's quite a quick, rough and ready way of anyone wanting to get comfort that this is a bona fide compliant business. I'd say FCSA is a good start. You should always do your own checks, and also, as with any supplier, recommendations from the market and talking to other businesses that handle contractors or professional advisors that you're engaged with is another good starting point. But they would probably be my main areas. It can be a real rabbit hole once you start going down it if you want to do a full detailed audit. But there's probably some quick ways of getting some initial levels of comfort before you might do some additional checks.
Yeah, I suppose the lawyer in me says, make sure you've got some kind of indemnities and warranties in the contract, along the chain. I mean, it doesn't. If one of them goes bump, you can't necessarily recover from a company that's gone bump. So that makes things a bit more difficult. But making sure that those kind of things are in your contractual documentation will give you some level of comfort, and you would expect to see them. Probably in a decent provider's terms and conditions as well. So that reflects well on the company that you're contracting with along the chain.
Yeah, we definitely we would have that as standard in any of our contracts up. But you're quite right, the indemnities and warranties are only as strong as the business's ability to survive and trade. And obviously with the economic landscape as it is at the moment, that's quite a moving feast. So definitely good to do some company house checks on financials.
And you both mentioned contracts there, which is quite timely, because we have probably time for one final question, and it is around contracts. And people are looking at their contractor population, looking at the assessments, and the question is there such a thing as an IR35 friendly contract?
Well, that's one for you, Justine.
An IR35 friendly contract. An appropriately drafted contract will have tick the boxes on things like being able to substitute, having a substitution clause in. The expectation would be that the contractor will have their own insurance, professional indemnity insurances, and there'll be terms like that in there. So yeah, there are more compliant documents than not, and if you take advice, then you can have one properly drafted. But the reality is that it doesn't necessarily matter what it says on the tin with respect to these cases, because it's actually what's happening on the ground and the look and feel of the relationship that ultimately determines the status. So you can have the best drafted contracts in the world from the best lawyers in the world, but if you're not actually doing what it says in the contract, then the determination can be something very different. So you just got to be aware of that, really.
I think to your point earlier, Justine, around that sort of lethargy or apathy or whatever it might have been since 2000 around IR35, we often see people look at contracts as, oh, it's okay, we've got an IR35 friendly contract here, so that's fine. Well, it never probably was fine, but now the risk profile shifted away from the contractor and up to the client. All of a sudden, there's real attention being paid to contracts and working practices, and most HMRC investigations, the cases you mentioned earlier before, it's 90% working practice and what's actually happening day to day, and 10% is the easy bit of what's written down in a contract.
Exactly, because like for example, the Eamon's case turned a lot on the fact that ITV provided him a car to travel in and out with, that he didn't have to pay for, that, you know, he was handed a script rather than having any kind of control over who he interviewed. And it was really down to the kind of working relationship that he had with ITV, rather than the fact that he did have a contract with them that said he could substitute. It did, you know, all the relevant boxes were ticks, but, you know, the way he was working made him fall inside. So yeah, that's why you've really got to take some advice, because we got to kind of look at all of the different tests and say, look, genuinely, how does this work? How does this work? How does this work? And, you know, if you answer it honestly, again, I come down to the duck quote: if it looks like a duck and quacks like a duck, it's likely to be a duck.
Yeah, absolutely. Dave, I'm intrigued to know how did we move the dial at all on that?
Well, I'm going to come to that, and just I was just going to let you off the hook here, because I think that's all we've got time for, and you've been well grilled, and thank you very much for that. Many thanks to you two, and to all of our attendees for their attention. We trust it's been very worthwhile. And just to tell you then, interestingly, there was nobody who was not at all prepared at the beginning. We now have 10% who feel they're not at all prepared. That's probably because you've made them realise what's involved and they need to go back and do it again. But the good news is we moved from 70% reasonably to 81% reasonably, and 10% now feel fully prepared. So I think you've done very well. That's a good shift. Those 10% of you who are now frightened to death, give us a call and we'll see what we can do. But thank you for that. We will be following up with an email to all attendees, which will contain a link to the discussion so you can see it again and pass it on. We'll include a quick questionnaire in that, just to let us know how we've done, and we'll have the contact details for Justine and Dan if there's anything you do want to pick up on. So just in time, thank you again. Have a great day.
Thanks,
Goodbye.
everyone.
Thank you.